Okay, good afternoon, everyone. It's been a while since I've made a video, so good to see all the new students that have joined my online training course, and I look forward to working with you guys. I'm going to introduce something to you guys now called cluster trading. It's an algorithm that I've been working on for quite a while. You can see it involves this indicator down the bottom. It's called Samuel trading market strength. It's on its third version at the moment, and it's now finalized and completed, which I'm very happy with. I kind of got fed up with using stochastics, so I'll show you what I'm talking about, stochastics and RSI. I just thought there was a better way of identifying in the markets turning points and points of interest. So that's exactly what we did, and we recreated that. So I'm just going to show you stochastics overlaid on top of the actual thing. You can see how erratic the indicator is on the chart here in comparison to the Samuel trading market strength indicator. Now, you're probably wondering what all the dots are, so I'm just going to go over and explain them. I'll get rid of the stochastics for yourself. Okay, so what you can see here is just on the 15-minute time frame, you can see the trend lines are moving up and down, up and down, up and down. And you can see how price is moving. Now, what we're looking for here is the tool is showing us where the strength is within the market. And, based on what you've learned so far, 50 above the 200. You can always look at the higher time frame, 30 minutes or 1 hour, just to confirm that. But we're looking here for, you can see the turn, it turns red, showing us that there's sellers in play. And then when it drops below the 30 level, you start getting these little dots. Now, this is called the clusters. Now, you get the clusters for every bar that closes below the 30 level, and it almost helps you prepare for those zones of interest that we'd be looking to trade on. Now, you'll see a black dot is been programmed into the algorithm to actually give a point of all. Now, the pullback could potentially be open, and then when it turns green, you'll then get a big cluster, either big circle here, signaling that this is now a buy zone, and we should take interest in buying into this. Now, the way that I'm looking to trade this myself is to use a larger stop and to have confidence within the tools and the algorithm that is calculating the entries based on. And actually, I use 150 pips stop loss as a hard stop loss and a 5% risk over that. Now, what I'm going to do is I will take that entry. I'll, for example, enter here where it turns green. I'll enter in here, and then I'd look to exit when it then turns from phase 1 of buying into phase 2 of selling, which you can see here. So I wouldn't have netted too much on this trade, 60 odd pips, but hey, it's not too bad from the next position. Next time I would have entered here, I would have been notified about the potential of the buying zone from these small clusters here, and the entry signal is here. Now again, you can see that we didn't get much movement, and again it's late hours of the morning, so you can see the price comes up and it changes to a black dot showing potential of a change in trend, and the red was signaled, giving us another 25 to 22 points. You can see here another signal was generated here. However, it didn't really provide a strong buy signal with a large cluster. However, again, if you did take it whilst the trend was just up, you still would have got a position there. And again, to the downside, if you took the sell position here on the cluster, you're looking at around 77 pips on that one. Now, you're probably going to wonder, okay, so what happens in this scenario here? Well, let's just run through that. So we gained, 50, 70, and then 20 odd pips there. So if you took an entry here on the cluster, you'd have been waiting for the opposite signal to go below. We didn't get that, and you would have actually taken the full 150 pip loss. Now, that's going to happen, but it happens very rarely from what I've seen. And so, for example, we would then have entered in here on this cluster here. Goes against us by 50 pips, 70 pips to be precise. So 150 pips is down here, well out of the way. And we didn't really get an exit signal. I mean, you probably could have exited here if you was actually up there at that time quite early, giving you 35 pips, and then allowing you to re-enter again. But however, if you didn't, you would have got the full move here of 150, 160 pips, giving you that loss back, and then allowing you to now move on to the next trade. So again, you would have gone in here, and you would have then exited above here, giving you another 100 pips. If you missed the first one, luckily enough, you would have managed to get the second one, giving you 106 pips. So what happens in this scenario here, this is just going straight off the signals. Obviously, if you use it in line with trends, support and resistance, your probability is going to be a lot higher. But hey, let's just say if you took this position here, goes up in your favor, 50 pips, comes against you, goes against you by 90. So if you didn't get the first one, you could have then entered in here. I would never advise re-adding, but you then see here that you get the signal change around this point here, giving you a 25 pip loss rather than taking the full hit of 150 pips. Again, if you entered here, you didn't actually get the full signal cluster here, so you probably wouldn't have entered. Like what I'm talking about is the big cluster signaling the strong change. It looks like the move happened rather quickly, and therefore you wouldn't really have got caught in it. Again, though, you would have taken this one and you would have lost here. So you would have taken the sell entry. It goes up against you, 120, 140, 149. If you didn't get stopped out, what you do now is you would take the reverse trade. So you'd taken 120 pips loss and gone, okay, I was wrong in this decision. This is bearing in mind that the higher time frame on the owl is agreeing that it's in a downtrend. If it's not, then you wouldn't have taken the trade. I'm just running through past data to show you how to trade this. So you would have then taken 170 pip loss, you would have entered again on the cluster, and you would have exited at the tops here, giving you back 53 pips. And this really works well in choppy markets as well as trending markets. So for example, you would have entered in here. If you didn't get this entry, you would have then got the second one here, and giving you the exit here of around 10 pips profit. Again, enter in here, giving you around the profit of 85 pips. Again, enter in here, giving you around on the exit signal here where it changes trend, another 50 pips. And here's probably a good example. Let's see how this one panned out. So it moves up in your favor by 40 pips, goes against you by 50 pips. So those that didn't get the first entry might have looked at getting in here off of the potential support level coming across here potentially. It then goes against you by 110 pips, so near your stop loss, doesn't stop you out, comes back in your favor, and you get a reverse signal. So you would have only taken a 22 pip loss, and then you would have had the beauty of being able to reverse, and then got that pips back with 32 pips, and then you would have been able to re-enter the next trade here, which was really nice if you held on to it, or if you took the exit, which was generated down here, you would have got 29 pips, potential of 100 there. Again, moving on. You could have taken this trade here, where it turned on the first turn above. It went against you by 70 odd pips, came back for your exit here, giving you plus 13 or 20 pips. By giving it that 150 pips breathing room, it allows for the space to work out and for it to pan out in your favor. And that's the really important part here. Again, nice simple trade there of 36 pips. Didn't really get the cluster set up too much there, so no entry. And you would have got this entry here with a profit of 46 pips. Another nice entry here, giving you a profit of 28 pips. And if you took the reverse here, I have a feeling that on the 1 hour it wouldn't have actually said to sell. You can see here that you're getting higher lows. So I wouldn't really predict that you'd be taking those sells, but if you did, you had plenty of opportunities to come out with profit on the buy signal on the reverse side here. So you could have got 17 pips, 20 pips, or come away break even, not causing too much damage. And again here, you would have got a nice move there of 100 pips. Now this is designed to allow flexibility to trading intraday on the 15 minutes time frame, and you can trade this on the 5 minutes. I mean, here you can see the buy zone kind of entries that it starts predicting. It goes against you by 50 pips. You do get a reverse sell start, allowing you to come away without a loss and actually getting a small part profit. Again, if you were to take the sell here, you would have been able to come away with small profit. You take the buy side, and you come away with 60 odd pips profit. You take the buy side again here, and you come away with small part profit, 6 pips, and then you get the actual solid move. And what this does is it allows you to minimize your risk, which is what we're all here for, is to minimize the amount of risk we have on the table, but to generate large amount of profit. So you can see here 83 pips profit. You can then see that once you hit a solid trend like this, it's just easy pickings from the market. Another again 30 pips, followed by another entry here with an exit potentially here at 40 pips, or if you held on for the actual exit below here where it changes color, you're looking at 25 pips. Again, what beautiful positions here. You're looking at 72 pips profit, followed by a huge drop off there of 180 pips profit. Now you would have taken a trade here, and it goes against you and you lose 150 pips. But would you really mind if you took that? After you've taken this position here, You've already made 190, so you're already covered for that position. You then regain positions here, and so on and so forth. And this is basically the kind of entries that you can take within the market, allowing for these kind of profits. Lovely trade there. And by having these positions in our favor, it allows us to focus on the areas that are more important to our trading. For example, I'm looking at the 15 minutes here, but let's have a look at the 1 hour to see which direction we've been in. Okay, we've been pretty rangy. We've been in a downwards move, and you can see points of interest on the 1 hourly charts. Even on the 4 hourly charts, you can see those points of interest. Let's whittle it down to 5 minutes, and it says we've got potential buy entry as we look now. So you can see the trends just switch. We had the buy entry signal down here, and you can see the position now would be up around 11 pips. Let's kind of show you what you're looking for in regards to that. You can see here there was a potential starting to look for a buy, trends reverse, signaled a sell pattern, and you had your entry there. So you can see here the consistency in what you're kind of looking for on positions, and the points of interest that you should be focused on as a trader. You can see the turn points are very clear, signaling the entry, signaling the exit, signaling the entry, exit, entry, exit, entry, exit. And this is kind of what we're looking for here. So the first entry would have been here. So it would have said buy in here. It went against you by 25 pips, comes back. You still make profit because you're allowing for the breathing room. You're allowing for that space. So this is an introductory to cluster trading. I hope you all enjoyed it. And if you would like more information on how to get a hold of the cluster trading algorithm, then send me an email to sam.leach@samuelandcotrading.com or visit the website www.samuelandcotrading.com. Look forward to hearing from you guys. Take care. Bye-bye.